Good evening, Garage Gang. It's Thursday night, January 22. The lights are low, the screens are loud, and the market is pretending everything is fine. But tonight, the real money is telling a different story. Before we even touch the charts, here's what actually hit the wire today. Gold ripped to another all-time high, not once, not twice, but again. Kansas introduced a Bitcoin and crypto strategic reserve bill. Trump filed a $5 billion lawsuit against JPMorgan and Jamie Dimon. And Trump warned retaliation is on the table if Europe sells US securities. That's not hype. That's fear with a balance sheet. That's pressure showing up before the crowd knows where to look. Now, before we rip, make sure you smash the like, hit follow, and share this with your fellow Deegans. Or that guy from the bar, you know the one, the Shibu to the moon bro guy. He might actually learn something tonight. Because this is the only show that doesn't sell comfort. We don't tell you what sounds good. We tell you what's actually happening, based on where the money is moving, not where the noise is screaming. All right, narrator John in the driver's seat, blackjack calling the hand, clutch in, engines hot, safety off, let it rip. Here's the truth most people won't say out loud. Tonight wasn't chaos, it was repositioning. Risk didn't vanish, it shifted. Confidence didn't collapse, it migrated. And when headlines stack like this, the question isn't up or down. The real question is who's adjusting before the move and who's reacting after it. Because markets don't break when everyone panics. They break when everyone pretends everything is fine. And right now, too many people are pretending. That's the setup. Now we go deeper. All right, now that you understand the structure, let's break down what gold ripping actually means, because this is where most people embarrass themselves. Gold doesn't move like this for fun. Gold doesn't care about your vibes. Gold doesn't chase narratives. Gold moves when capital with memory smells danger. Repeated all-time highs in gold mean one thing: someone big is buying insurance. Not traders, not influencers, governments, funds, institutions that survive decades, not cycles. When gold is screaming while volatility pretends to sleep, that's a lie in the system. That's stress being priced quietly before it shows up violently somewhere else. It tells you confidence is thinning, even if the screens look calm. And that matters, because everything else tonight plugs into that signal. Now roll it forward. Kansas just introduced a Bitcoin and crypto strategic reserve bill. Read that again slowly. A US state is openly discussing crypto as a reserve asset. That's not a meme. That's not adoption vibes. That's political normalization. That's crypto moving out of the speculation bucket and into the sovereign balance sheet conversation. States don't chase tops, they hedge futures, and that lines up perfectly with what gold is already telling you. Now, let's talk about power. Trump filing a $5 billion lawsuit against JPMorgan and Jamie Dimon isn't about money. It's about leverage. It's a direct shot at the financial establishment at a moment when institutional trust is already thin. Whether it wins or loses doesn't matter short term. What matters is the signal. The gloves are off. Legal warfare plus financial giants always equals volatility downstream. And then comes the real accelerant. Trump warning retaliation if Europe sells US securities. That's not a soundbite, that's a stress test. If foreign holders even consider reducing exposure to US debt, yields move, currencies move, gold moves more. That's why these headlines stack: gold up, crypto reserve bills, legal warfare with banks, sovereign retaliation threats. This isn't random, this is capital repositioning. The old system is getting louder because it feels pressure. And when systems feel pressure, they don't break politely. They snap, they whipsaw, they punish anyone who's emotional or late. Now here's where it escalates, because this isn't just a financial cycle, it's a control cycle. While markets argue about rates and charts, AI is quietly deciding who gets access, who gets limits, and who gets power. OpenAI just rolled out age prediction inside ChatGPT. Not age reporting, age prediction. The machine doesn't ask who you are anymore, it infers it. Behavior, patterns, usage, language. That's the new ID. And when the system decides you're under 18, restrictions activate automatically. Different access, different boundaries, different experience. This isn't about kids. This is AI moving from a tool to a governed environment. Access is no longer default, it's conditional. And once machines decide who you are without asking, they also decide what you can see, what you can build, and what you can touch. At the same time, coding itself is being handed off. Humans aren't typing anymore, they're supervising. AI is writing massive portions of production code right now. Humans are becoming strategists, not operators. If you can't think clearly, you're useless. If you can't direct machines, you're replaceable. And this is where Elon enters the picture. Elon isn't building apps. He's building an organism. AI as the brain, social platforms as the nervous system, robots as the body, one loop, one feedback system, one machine that learns. Humanoid robots for public sale isn't sci-fi. That's labor without wages, production without fatigue, scale without people. Now zoom back out. Gold up means fear. Crypto reserves mean hedging. AI governance means control. Different headlines, same story. Capital is repositioning. Institutions are protecting themselves. Machines are being handed responsibility. And the people who don't see it yet, they're still arguing about yesterday. Now we go deeper. All right, now let's talk about what most people missed today. Because the real danger isn't the headline you saw. It's the second order effect you didn't. First thing everyone ignored, volatility. The VIX is still sitting low, too low. Gold is screaming. Headlines are stacking. Legal threats, sovereign threats, reserve talks. And volatility is acting like it's a Sunday afternoon. That's not calm. That's complacency. That's the market mispricing risk because it hasn't been forced to reprice it yet. Low volatility in a headline-heavy environment is where traps get built. Second thing people missed, liquidity mechanics. Everyone keeps asking, why don't rallies stick? Because liquidity is being drained quietly. Treasury is pulling cash. The system is tighter than it looks. And the buffer everyone relies on is thinner than they think. That's why moves feel sharp but short. That's why breakouts stall. That's why every pump feels rented. This isn't a trend problem, it's a fuel problem. Third thing they missed, the paper versus native divide is widening. ETF sold, on-chain absorbed. That's not neutral, that's not noise. That's two different classes of capital operating on two different time horizons. Paper reacts to headlines, natives react to structure. When those two diverge, price chops until it doesn't. Fourth thing no one's talking about, DeFi risk didn't vanish, it localized. TVL looks stable on the surface, but exploits are clustering. That means risk premium doesn't disappear, it concentrates. Capital doesn't leave the ecosystem, it hides inside what feels safest. That's why broad risk-on thinking gets punished here. Rotation beats reach. And here's the one almost everyone missed. Options are starting to matter more than spot. Open interest is shifting, positioning is changing, pain points are getting tighter, that's not accidental. That's the market preparing to move faster than most people can react. And finally, the biggest miss of all, people are still trying to trade direction instead of regime. Up or down, bull or bear, moon or doom. Wrong question. The real question is simple. Who has control right now? And tonight the answer is clear. Capital is cautious, institutions are hedging, liquidity is constrained, AI is centralizing power. That's not a melt-up environment, that's a precision environment, and precision punishes emotion. So if today felt confusing to you, good, that means you're paying attention. Because clarity doesn't come first in markets, consequences do. And now that you understand what most people missed, we can talk about what actually matters next. Before we shut the lights down for the night, XXX and Lulu will be back tomorrow. Full strength, fresh data. And make sure you check out the website, gurucryptogarage.guru. It's free. Real-time data feeds, live context. The same signals we're watching in the garage. Jump in, kick the tires, and let us know what you think in real time. We're building this with you and not talking at you. That's it for tonight. Engines hot, safety off.